Hi, I'm Jim Juback, and welcome to this week's Trend of the Week video. This week's trend is war between speculation and investing, and I think this is playing out in the stock market. You could see it last week when we had bank earnings, and what we really got is, before we got bank earnings, the market was moving up on speculation that the Fed was going to indicate that it was starting to wind down its interest rate increases, and we're probably only going to get a 25 basis point increase on February 1st, and therefore the speculation was, hey, we're getting, the market will react positively to the end of the Fed increases, and maybe we'll start then speculating about when the Fed is going to start cutting rates again. Bank earnings came, and they were disappointing. Not so much for the current quarter that they were reporting, the fourth quarter, but looking ahead, they said, well, we think that there's a good chance of recession. We're going to put more money into reserves. And so bank earnings were generally disappointing in terms of guidance. But what was interesting to me is that after the bank earnings came out, we had a morning selling, not big selling, but selling in enough of the banks to take the indexes down. But then in the afternoon, we moved back up again. We stopped selling. And I think this is what people are basically, what investors and traders are basically saying is, hey, we think the potential profit from speculating on what the Fed is going to do is larger than the potential downside if we get earnings that are going to disappoint. We got a good test of that last week, but I think it's only the beginning of the test on Netflix. This is a chart before Netflix earnings on the 19th. But one of the things you'll notice is that this is really ugly. Not so much because Netflix hasn't been going up. We have this cross here, which is positive if we're going to continue that, but we still got this huge gap between the 200-day, which is at 246, and the 50-day. What concerns me is that we're still seeing the 200-day go down. And so the question really is, if we get bad earnings from Netflix, and analysts going into the earnings were suggesting that we're going to see a loss of about 73 cents for the quarter in comparison to a profit of 250. So the question is, when the market looks at that, will it say, who cares? It's past. We're looking at a better year ahead. We're just going to speculate on the Fed. We're going to, in fact, keep bidding Netflix up because, hey, again, that bad year-to-year comparison is really in the past, and Netflix looks like it's going to be doing better in the future. So that's what I'm looking for. I'm looking for, over the next couple of months, maybe until we get to March and the Fed decides to give us another signal, either pro or con, about its intentions. I'm looking to see this continued battle of speculation about, hey, we're really excited about what the Fed's going to cut rates, we hope, earnings are looking kind of down year to year, and guidance is not very strong. So speculation versus investing, that's the battle that we're going to see until we get to March, at which point the Fed gives us another dot plot that gives us some indication of where they think the interest rates are going and where the peak is going to be for 2023, 2024. Thanks for watching. If you like this video, please give it a thumbs up. You can subscribe to my YouTube channel, where you get notification of when we're doing them all. Subscribing is free. Speaking of free, you can also go to my free site, gbagpicks.com. It has 3 portfolios, and if you sign up there for alerts every day, you get whatever I posted. And that's, again, free. Can I say free one more time? Free. And if you want to pay me money, which I'd really like, you can go to my paid site. That's jubackam.com, and that's got 6 portfolios, including some ETFs and options and longer-term portfolios for millennials, not Lenny P, but millennials. And you can find links to all those down below. Thanks very much for watching.